Dear students, Assalamu alaikum. Welcome to our new lecture for the subject of accounting second paper. Today we are starting the chapter 4. This is the name of capital of joint stock company from your accounting learning workbook level 2. This is also called share issue. This chapter share issue. This class is applicable for 11 and 12 business studies. This is Mahmoud Hussain, senior lecturer, Department of Accounting, English Media Morning Shift, Rajaputra Model College, Dhaka. Dear boys and girls, I think you are ready to take my new lesson for the chapter 4 from your accounting learning workbook level 2. That is capital of joint stock company. It's another name of share issue. Dear students, after starting this chapter, learners will be able to have an idea about joint stock company, explain the characteristics, objectives and function of joint stock company, have an idea about share issue and its classifications, able to make a difference between share, bond and debenture, able to keep record of issuing share at par, at premium and at a discount. Dear students, in the screen you are watching the slide. After studying the chapter, what will you learn from this chapter? The first one, I have to say the definition of joint stock company. Two senses are available for definition of joint stock company, that is company. In ordinary sense, a joint stock company is a business entity which is owned by shareholders. Each shareholder owns the portion of the company in proportion to his or her ownership of the company's shares, that is certificates of ownership. In financial sense, a company may be defined as a legal and invisible artificial person incorporated under an association of persons having an independent, separate legal entity along with the perpetual succession and common sale whose liability is ordinarily limited. The capital is divided into transferable shares held by shareholders in order to earn profit. Dear learners, now you have to know what is shares. You can see in the screen definition of shares. In general sense, a unit of ownership interest in a corporation or financial asset. In financial markets, a share is a unit of account for various financial instruments including stock, that is ordinary or preferential, and investments in limited partnerships and real estate investment trust. The common feature of all these is equity participation that is limited in the case of preference shares. Now you have to know what is share issue, that is issuing of shares. A corporation divides its capital into shares which are offered for sale to raise capital, termed as issuing shares or share issue. Dear learners, I think you are writing to your accounting copy for your future reservation or future participations. Now we can discuss about the concept of share. In practical terms, shares are individual pieces representing an equal stake in the capital of a business organization. The number of shares make the respective holder eligible to receive a certain part of the profits made by that company. The shares also help the respective holders to be able to lay claim to a part of the worth of the specific company. This is applicable, however, only when there is liquidation. According to financial terminology, the share is regarded as a unit of account that can represent several monetary instruments such as stocks, a mutual fund, or limited partnership. Dividend, the earning that the holder of a share makes from his or her shares, is called the dividend. An earning amongst held shares is only possible by the company making a profit. Dividends are actual part of the profits of the company whose shares may be held by the respective holder. These are non-reinvested profit. Classification of shares. Shares can be divided into two types, namely common shares. Second one, preferred shares are commonly called priority shares. Dear learners, now you can know about the issue of shares. How many types of issue of shares or share issuing? Three types of issue of shares or share issuing. Number one, at par, that is equal value or par value of face value of share. Second one, at a premium, that is excess value of face value of share. Number three, at a discount, that is less value of face value of share. Dear students, you have to know how many types of issue of shares. It can be divided in three types. Number one, at par, that is equal value. Second one, at a premium, that is excess value of face value share. Number three, at a discount, that is less value as face value of share. Now, generalizing of transaction relating to issue of share. Dear students, three categories are related to journal, that is share issue. At first, we have to start at par, issue of shares. Transaction number one, when application money received from interested buyer or shareholder, then you have to give the journal bank account debit, share application account credit. Second one, when share allotted to the share applicants, these entries for journal, share application account debit, share capital account credit. Number three, when excess application money returned or refunded to the concerned applicants, it's for journal, share application account debit, bank account credit. Or number two and three, if you are required to give at a time, then this journal is FFUT. When share allotted to the share applicants and excess application money returned to the concerned applicants. Journal for this entry. Or for transaction, share application account debit, share capital account credit, bank account credit. You can see 2 and 3 at a time. You can write in your solution copy. Number 4, when paid for expenses of share issue, journal entry for this transaction concerned expenses or preliminary expenses debit, bank account credit. Dear students, you can see totally 4 journals are related to share issuing journal in this chapter. So now we can go to issue of shares at a premium. Number 1, in transaction, when application money received from interested buyer or shareholder, journal entry for this transaction, bank account debit, share application account credit. Second one, when share allotted to the share applicants with premium, journal entry for this transaction, share application account debit, share capital account credit, share premium account credit. Number 3, when excess application money returned to the concerned applicants, share application account debit, bank account credit. Dear students, I think you are writing in your accounting practice copy. For your betterment. Or when share allotted to the share applicants and excess application money returned to the concerned applicants, if you want to give the second and third one at a time or in a journal, then you can give the alternative journal. This one is share application account debit, share capital account credit, share premium account credit, bank account credit. Totally 4 accounts are involved in this transaction. I repeat again, when share allotted to the share applicants and excess application money returned to the concerned applicants, then you can give the entry share application account debit, share capital account credit, share premium account credit, bank account credit. Number 4, when paid for expenses of share issue, expense of share issue or preliminary expenses debit, bank account credit. Dear students, you are seeing in the slide content, totally 4 journals are related to share issuing. If it is at par, if it is at a premium, now we can go to the share issues at a discount. Number 1, transaction, when application money received from interested buyer or shareholder, then you can give the following journal: bank account debit, share application account credit. You are seeing for the first journal, all are same, as it is at par, as it is at a premium, as it is a discount. So for journal, you have to write bank account debit, share application account credit. Second one, when share allotted to the share applicants with discount, then the journal is share application account debit, share discount account debit, share capital account credit. When excess application money returned to the concerned applicants, then the journal is share application account debit, bank account credit. Now, if you want to give the journal for 2 and 3 at a time, then the journal would be share application account debit, share discount account debit, share capital account credit, bank account credit. This transaction is for when share allotted to the share applicants and excess application money returned to the concerned applicants. Then the journal is share application account debit, share discount account debit, share capital account credit, bank account credit. Number 4, when paid for expenses of share issue. Expense of share issue or preliminary expenses debit, underwriter's commission debit, bank account credit. Dear students, I think you have written in your copy all journals are related to share issuing. We know 3 types of share issuing: share issuing at par, share issuing at a premium, share issuing at a discount. 3 types of journal are already shown in your content for the chapter 4 capital of joint stock company, that is share issue. Dear students, now you can understand the terms of stock. Now onwards, you have to know stock typically takes the form of shares of either common stock or prepared stock. As a unit of ownership, common stock typically carries voting rights that can be exercised in corporate decisions. Prepared stock differs from common stock in that it typically does not carry voting rights but is legally entitled to receive a certain level of dividend payments before any dividends can be issued to other shareholders. Convertible prepared stock is prepared stock that includes an option for the holder to convert the prepared shares into a fixed number of common shares, usually any time after a predetermined date. Shares of such stock are called convertible prepared shares. Now you can know what is the difference between stock and shares. The stock of a company is sold in units called shares. A share is a unit of ownership or equity in a company or a corporation. Shares are one of the most traded financial instruments. If you buy a share of a company, you are buying a piece of the company. When you own more than one share in a company or several companies, these are called stocks, because stock generally refers to a portfolio of shares. On the stock markets, shares are also referred to as equities. If you see the term equities trading, it is exactly the same as share trading. The person who buys shares in the company is called a shareholder and has a claim on part of the corporation's assets and earnings. Companies divide their capital into equal units and sell these on the stock market as a means of raising capital for its expansion rather than borrowing the funds from the bank. Stocks and shares are traded in various stock markets all over the world. A stock is a share within a company. A company can separate their stock into lots of shares. If we purchase stock, we will have a very small percentage in ownership of the corresponding company. When these stocks are put into the business market, the price they are worth will either rise or fall. If the price rises and goes up from what you paid for it, you can sell the stocks and make money. If the price of the stocks fall from the price you paid for it, you will lose money. Dear students, now you can know what is the difference between debenture and share. A person having the debentures is called debenture holder, whereas a person holding the shares is called shareholder. Debenture holder is a creditor of the company and cannot take part in the management of the company, while a shareholder is the ownership of the company. It is the basic distinction between a debenture and a share. Debentures holders will get interest on debentures and will be paid in all circumstances. Whether there is profit or loss will not affect the payment of interest on debentures. Shareholders will get a portion of the profit called dividend, which is dependent on the profits of the company. It can be declared by the directors of the company out of profits only. Shares cannot be converted into debentures, whereas debentures can be converted into shares. Debentures will get priorities getting the money back as compared to shareholders in case of liquidation of the company. Dear students, I think you are understood the all items, that is share, stock and debenture. I have already discussed about the share, debenture and stock. Overall, our chapter is share issue. How to record it in your journal? Just I delivered to you in my content. Dear learners, for your betterment, for the next preparation for lecture in this chapter, you have to follow this lecture for knowing the journal, how to process, how to record the journal entries for sharing. So that's all for today. Allah Hafiz. Assalamu alaikum wa rahmatullahi wa barakatuh.